A very warm good morning to each and everyone who have joined us today for this panel discussion on climate change, response of the insurers. As you all know, climate change occurs when the Earth's climate system adapts and exhibits new weather patterns that can last for as little as few decades or up to a few million years. Continuous change is the key word for climate change. And unfortunately, this is a common argument made by doubting the masses who believe that climate change is something that we do not worry about. But have you ever wondered what has turned this climate change into a climate emergency? It is the velocity and speed with which it is changing and the reasons for which it is changing so rapidly. We need to thank mankind for the human caused factors that has led to such drastic changes occurring in such short periods of time. There are many different factors that are contributing to the accelerated rate at which the climate is changing. And some of these factors are out of our control and happen without human influence. Carbon emissions and the rise in CO2, greenhouse gas emissions, impact on animal agriculture, the rise in global temperature, warming of the oceans, shrinkage of the glaciers, rise in sea levels, etc., have all cumulatively ensured that extreme incidents like the super cyclones, devastating floods, tectonic movements leading to earthquakes, swarming of the locusts happen frequently, and they are not confined to one region or area. They are global in nature. But I will leave the discussion to the experts. And let me now introduce to you our panelists who have taken time to join their busy schedules and enlighten us with their thoughts. First and foremost, the speaker of the day, Mr. Adil Dugal sir. He is an insurance veteran with a vintage of over 31 years. He has worked not only in Indian markets, but has experiences from across the globe. He has also cleared the exam for a licensed qualified insurance broker and has worked as an insurer both in the public and private sectors. He has worked with United India, Al Madina Gulf, RSA, Alliance, etc., and has also worked on the client side while working with the broking companies. Sir has just taken a sabbatical from his last assignment when he was heading the Corporate Solutions Group at Universal Sompo General Insurance Company. We are extremely happy to have you with us today, sir. Mr. Amit Srivastava is the CEO and the Principal Officer of the GA Insurance based out of Tanzania. He also has an experience of over 31 years and has worked in United India Insurance Company Limited. He was the founding member of the IFCO Tokyo General Insurance Company Limited and then moved to Mumbai as head of underwriting and reinsurance with the Universal Sompo. Currently, he is based out of Tanzania, and we welcome you, sir, to this panel discussion. Our third guest, Mr. Pankaj Tomar, is the first and foremost our alumni. He is the head of Indian subcontinent business for AXA Climate. He brings over 20 years of experience in the insurance, reinsurance, and broking industry. He has been involved in various projects on parametric risk transfer solutions addressing the impact of climate change. On behalf of the entire BIMTech family, I extend a very warm welcome to you, sir. And the person who needs no formal introduction, the moderator for today's session, is our very own dear Professor Pratik Priyadarshi. And it is interesting to note that all the panelists and sir have worked together at one time or another during his long career of 3 decades. Over to you, Pratik, sir.
Right. Thank you very much, Rachel. That was absolutely fantastic. And just for the purposes of record, yes, Atul, Amit, and I, we come from the same batch of United India 1989 batch. But that does not leave out Pankaj, because when we were working together at Tata AIG, we had never thought that a day would come where we would sit across the table and have a discussion as to what exactly this climate change is all about. How can we contribute our, 2 cents into making this a global success? I remember when I was in school, we were told a small story about this little boy who was in Holland, and when he was going to the school, he noticed that one of the dikes, dikes were the huge dams built across the North Sea to ensure that Holland was protected from the water coming inside. So he noticed that there was a small hole there. And the poor child, he got scared because he saw water seeping into the country, into the land. He could not think of anything else. So what he did was he put his finger there to stop the incoming water. And, he waited patiently for somebody to come and help him. Now, the rest, what happens is something different. The point here is that that particular child found that there was a problem related to the atmosphere, to the climate, which he had no say in. And he did his two bits to ensure that it was stopped. Most of us have seen such issues happening across the globe. My question is, how many of us have actually taken out our time, consciously made efforts to ensure that we get out of this thing? And that is precisely why I would like to have this interaction where, and believe me, I'm going to provoke you. Atul, Amit, and Pankaj, please absolutely feel free about giving your opinion, because my intention here is to provoke you. Bring out the best that you have to offer, because most of my listeners and viewers are my students. There are some other people, some other concerned people from the insurance background, some they are not from insurance background. But the idea is that we need to provoke you so that we get to know what we want to know. And from that perspective, Atul, before I ask you to go in for your presentations, the expectations that we have from you is that since you are the first one who's going to initiate the topic, I would like to understand, what is this climate change and how does it affect us? I mean, we have heard of climate change, we've heard of sustainable development goals, and we also know about the Paris Convention of 2015. 2015, and the Paris Convention of 2030, I should say. We also know about whatever is being planned. But more importantly, what we would like to know is, how can insurance help as a risk mitigating tool in this climate change situation that we have? So, if Atul, if you are ready, you could just let us know exactly why and how.
Okay. Thank you, Prateek, for this wonderful opportunity and for inviting me for a discussion on this important topic. Climate changes are affecting us all in a big way, and the response of the insurance industry assumes a big significance to serve the public at large during these difficult times. Before we deliberate further on this important topic, I would first like to run a small presentation which will help us understand what is climate change, what causes these changes, and how the insurance companies are responding to these challenges being posed to us. So with your permission, I will share the presentation which I have made for the day, which I would like to put it up on the screen. Just give me a minute. I think so. I've lost the. Just give me a second.
You can use that share screen button, no?
Yeah, I'm doing that. Just give me a second. I'm not able to get my desktop on the, yeah, okay. So, is it visible?
नहीं अभी तक तो नहीं, not as yet. There are some issues there.
Yeah, I guess so. Just give me a second. Earlier, I was sorry for this goof up. Earlier, this was getting connected. Now, I think so there's some issue.
So, if you want, I can run it for you.
Yeah, please, if you don't mind. I think so. I seems to have.
Okay, I'll do that. Just where's it gone? I had it with me. Yeah. All right. No, this is something which is not the part. Okay. So I'll just can't share my screen. I cannot seem to share my screen with you. Yes. Right. Can we see this now?
Yeah. Thank you.
Right.
So, through this presentation, I would first like to basically, take you through as to what exactly is meant by the climate change. And, so climate change is basically a change in the usual weather conditions found in a place. And this could change in how much rain a place usually gets in a year, or through a change in the place usual temperature for a month or for a season. So the causes of these climatical changes can be natural. It could be due to changes in the Earth orbit, sun's intensity, circulation of atmosphere and oceans, volcanic activities. Although the Earth's climate has been changing many times throughout its history, but the rapid warming being experienced these days can no longer be attributed to natural causes alone. There are human factors also responsible for this, and the factors are predominantly, like the burning of fossil fuels, cutting down forests, development of land for farms, cities, and roads. And all these activities have released harmful gases into the atmosphere, which is disturbing our ecosystem. So it is causing a greenhouse effect. The Earth's temperature is going up at an alarming rate. This will cause more snow and ice to melt. The sea levels are rising by 3 millimeters in a year. Some cities, as per the recent news reports that you would have seen, are supposed to be underwater, like Miami in US, Osaka in Japan, and there are some small islands in Pacific, including the recent news which you would have probably seen in the Indian newspapers talking about the 7 coastal cities in India which will be underwater over a period of time. Due to these climatic changes, some places will get hotter, some places will get freezing winters, some places will get stronger hurricanes, and some places will get more rain. The rainfall patterns are changing every day. Now, before we move further, they say that a picture can speak louder than words. So I will take you to the next picture. This particular picture actually has been taken by me. It was taken due to Gonu in Muscat in 2007, when I was the GM marketing for a composite insurance company over there, namely Al Madina Gulf Insurance Company. This picture is special to me because I took this picture from a bridge, and I had gone to rescue a family which was living in these villas. So the family actually carried their children on their shoulder, and they crossed the valley, and then they came to us, and I picked them up in my car and brought them home. And incidentally, 2007 was my first year in Oman. And let me just share with you that for the last 99 years before 2007, it hadn't even rained in Oman. So they don't have any drainage system. It's a desert. But the Oman witnessed an unprecedented weather condition in 2007 for the first time, when a cyclone called Gonu passed over the Muscat, and it picked up water from the ocean and poured it on the coastal towns. And I was present over there. I was a new member of the Al Madina Gulf Insurance Company. And I had started my journey in Oman only in the month of Feb, when this incident occurred somewhere in June. So you can understand that, there is an old saying, ki sar mundate hi hole pade, when we started our journey in Al Madina Gulf Insurance Company, we thought that since we'll have to pay so many claims because of Gonu, probably, our job is going to be at stake. But let me share with you that if you have your intentions right, and if you have your act right, you can convert even a calamity to your advantage. Post this Gonu, we actually immediately advertised in the newspapers that if you have suffered any loss, you can report to us. So our numbers were flashed, and people reached out to us for their claims, and we could settle the claim. 91% of the claims were settled within 30 days. And we were a new company, so there were not many claims, but still significantly high, and we paid over 2 billion, whereas the 2 million Omani Riyal was the premium which was contemplated for the company in the first year. And when we settled those claims within the first month, the journey ahead was very smooth for us, because with the kind of services which were being rendered during this difficult time, our company ended up doing a premium of 3.94 crore as against an annual target of 2.9, and we tied up with some of the leading banks in Oman, like Oman Arab Bank, which happened to be the second largest bank in the country. And when I went for a bank insurance tie-up with them, they said that, we have seen your services, you just let us know where we have to sign. So that is the kind of response which we got from them, when the services were rendered in an efficient manner, and we were able to give a 5% dividend to the shareholders in the first year of operation, despite settling the claims for over 2 million Omani Riyals in this thing. And the success story, which was exhibited by Al Madina Gulf Insurance Company, was also published in the Oxford magazine in 2008. Those of you who would be interested probably can go through that. So yes, the climatic change, they will affect us all. As you can see that, the losses are growing day by day, and these are the losses which are being experienced globally. Whether we talk about the Hurricane Irma or Harvey in US, the California fires, the mudslides in Colombia, earthquakes in Mexico, and the recent flooding in central China, which is, quite surprising, because China has built so many dams, and the places where they are experiencing this flash floods today is all because, because of the construction of dams, the water level in the central China has gone up. So they have not been able to absorb enough water, which is causing, flash floods in China, and China is finding it difficult to cope up with the pressures which they are witnessing because of the excessive rains over there. And these incidents have led to, significant losses running into billions of dollars. And India is also not an exception, So if we talk about the Indian experience, like I would, as they say, the picture speaks louder than the words. Like Kashmir of all the places actually witnessed floods in the recent past, where 390 villages got totally submerged, and about 2,600 villages had to be relocated, and the financial losses which were suffered to the tune of 6,000 crores approximately. And why only Kashmir? I guess if you look at the suffering that we have seen in Bhuj, where the magnitude of the earthquake was almost about 7.7 on the Richter scale, and it led to the financial loss of 8,600 crores approximately, and almost about 19,000 deaths, and injuries to 1.66 lakhs people, who were there in the Bhuj during this difficult time. And and also, of course, tsunami, which was witnessed in South India, which led to almost about 2,80,000 deaths and financial loss to the tune of 2,829 crore in the coastal towns of southern India. So, and of course, the next one, which is basically the Hudhud cyclone, which came in Orissa. Can you move to the next slide? Yeah. Which led to almost about 124 deaths and financial losses to the tune of 340 crores. And Orissa is facing these kind of cyclones quite frequently, like Fallen in 2013 and Varad in 2016 and few more. So yes, all these climatic changes are basically impacting us all. And you have asked me as to how do we manage to, how can we manage the impact of these changes? In the insurance, they say that, like either you reduce, you retain, or you transfer. So, obviously, and avoid. But of course, like the world leaders have signed an agreement in Paris in 2016. Where they agreed to keep the temperature rising by controlling the CO2 emissions, so that like the temperature does not go beyond 2 degrees each year till 2100. So, and each country was supposed to set its own carbon emission levels. But despite the promises being made, the CO2 levels, however, still went significantly. And after some time, USA, who was the biggest contributor, backed out from the Paris Agreement. Of course, I would not like to suggest that we should try and, retain or, and there is a very low possibility of avoiding such, the possibility of the impact which we'll have because of these climatic changes. But of course, insurance actually emerges as a risk mitigating tool with which, the people and the public at large basically can transfer this risk to the insurance companies and try and mitigate the losses which they suffer. So and of course the risk mitigation support provided by the insurance companies is by way of different insurance covers which are available to public at large, where the public can buy different kind of insurance covers like to protect their property as well as their businesses which they run. And insurance company has a lot of insurance covers, like to support the public at large. And next slide, please. And the insurance industry itself has undergone certain changes. I remember when I joined the industry earlier. The NetCat covers were being sold on demand at additional premiums. So, buyers beware on the buyers beware concept, where buyer was supposed to know as to what kind of covers they want, and if they want, they can pay an additional premium and they can buy this earthquake and STFI cover. So subsequently, when the climatic changes started happening, and like after Bhuj, like people started complaining that we were not aware that these kind of covers are available on demand on payment of additional premium. Later, the insurance companies were forced to include these covers And the customers were given an option to opt out and get the discounts, like in case they were not keen to buy these additional covers from the insurance companies. But in the current scenario, like if you would have seen the new regulations which have come about, there are new products which have been launched recently where these covers are coming as inbuilt covers, and the insurance companies are basically taking reinsurance protection to mitigate the losses, to respond to the need of individual customers, like who suffer from these climatic changes. So in a nutshell, it affects us all. It, and the insurance companies is responding to the needs of the customers. And the regulator in the Indian market is also proactive, which is helping the public at large, like to mitigate their losses. Thank you.
Atul, that was brilliant, particularly the photographs that you showed to us. And you rightly said that a photograph speaks louder than what you and I have to talk. But tell me something, even when you were at Al Madina, business continuity is something which is, one of the prime end results of a risk management process. Now, in a situation like the cyclone Gonu that you had, how do you think that an insurance company can manage their business continuity in face of such NatCats?
Yeah, okay. So most of the insurance companies in the world, they protect their balance sheet by way of a proper reinsurance program. I understand that the impact of these NatCat perils or this natural catastrophic losses can be significantly high for any insurance companies to bear. In fact, we are witnessing many articles in the newspaper now where in US, the people are feeling that the affordability of insurance is becoming a challenge because of the hike in the premiums because of California fire and the hurricanes which the US is witnessing. So the price of the insurance product world over is going up. And an individual, if he has to basically mitigate the risk, he has to buy the policy. In the similar fashion, any insurance company operating in the Indian market has to basically get a proper insurance cover and price the cover in such a way that they are able to pay the losses which are going to hit them.
I'll just take a short break from you at this point because I would like to go to Mr. Srivastava right now. Amit, when we talk about a black swan incident and a gray rhino incident, what is it that we are talking about? Because these are some terminologies which keep on cropping up every time when we talk about a climate change effect. So we also understand that. We are given to understand. I will not say that we understand it that way. We are given to understand that the foreign insurers have better approach to the technological advancements that probably could help in such climate risk solutions. How would you react to that?
Pratik, thank you once again. Good morning to everyone, and thank you for inviting me to the session and giving me this opportunity. Technology obviously is one of the key factors, key things which is playing a major role in assessment, prediction, and possibly the processes which are being handled by insurance companies. So the reinsurance companies definitely are now looking forward to use of technology for making predictions on the trends which have been observed on the parameters of weather over a large period of time. And when we have all that data, the data can be analyzed and made in particular regions, geographical regions or otherwise, to estimate what could be a situation, the worst case scenarios when we say. So technologies like now, which is coming up, obviously blockchain, which is something which has been talked about. Blockchain could be utilized for basically making faster, speedier assessment of data, which is available to us using technology by remote sensing and other data capturing, and that could be utilized. So that puts the reinsurers in a better position than being caught unawares to a great extent. While we cannot control the NatCat perils, but there is a component of man-made effects which are being caused. And in certain regions, like what Atul mentioned about trends which are being observed in the rise of sea levels, or the repetitive nature of, you can say, cyclones, or the increased frequency of erratic rain in certain territories. So some estimation and modeling can be done more effectively to be possibly more prepared, while we can't prepare ourselves 100% on this aspect.
Now, Amit, before I go any further, I also wanted you to explain what exactly is a parametric kind of a solution to my students. By any chance, if you have any presentation, it will be a big help to us.
Yeah, thank you, Pratik. I think I would rather run through a presentation on that, a short one at that, but that should possibly give an insight to the members. Are you able to see the presentation?
Yeah.
Is it visible?
Yeah, very much.
Yeah, so I'll just run through the presentation, and in fact, Atul has helped me a bit in the sense of talking about what is climate changes and what are the causes of climate changes. So fundamentally, see, while there are the natural cycles of the universe and the movement of Earth and all, which cause a component of climate changes, and which are almost known and certain to a great extent. But to that, there are man-made effects by the very factor that human race, for its own sustenance and survival, has to adopt technology, and industrial progress has possibly influenced or contributed, I would say, largely to the global warming by increasing the greenhouse gas emissions. So while we know that we can't avoid these things, that's the way we live and survive and sustain ourselves. Like typically we need power, so you have power plants, but we've been using coal-fired power plants. Transportation is essential for success of human economies, but we have fuel emissions as the negative side of it. Deforestation for the expansion of the areas for industrial setups or residential areas, and that leads to the reduction of the forest cover, again possibly releasing more of carbon dioxide. Fertilizers are all rich in nitrous oxide and nitrogen-rich fertilizers, which cause, again, increased adding to the carbon dioxide emissions and the greenhouse effects. Oil drilling, again, we need fuels, we need alternate fuels, and we are keeping on continuously hunting and expanding. And major economies where Atul was there, like, which are relying on oil. But the catch is, when you are actually doing oil drilling, you have the burnt of oil. When you are tapping natural gas as an alternate medium, you have to push water and fluids into the ruptures in the scales of the shale rocks to pull out the gases. So all those things are destabilizing the basic setup. Permafrost is there, but the greenhouse gases, which are increasing the global warming, leads to the melting of the permafrost, and which again releases more of greenhouse gases, which are reportedly tapped in the, you can say, the frozen areas of Siberia and many other places, Atlantic and all. So these things are obviously adding, and the impacts, as Atul has very well shown in the picture, so I'll just skip this part. Rising temperatures, increase of frequency of extreme weather events. Very realistically, you saw something which happened recently in Delhi, in New York, in other areas in the country. You see extraordinarily heavy rainfalls, which have not been seen ever for the last 2 to 3 decades. Cloudbursts in the mountainous regions, which are again attributed to basically the increase in temperatures, and to which human race is also contributing. Now, the parametric solutions basically have been available to insurance companies at CAT bonds. The CAT bonds means catastrophic bonds, which is basically an insurance-linked security solution. They've been there for some time now, and basically they are issued by insurance companies, reinsurance companies, and state agencies, which protects an insurance company in event of an impact, like what Atul was mentioning, like their company got impacted by this. So while a reinsurance company always has a excess of loss program for protection of their book in event of a catastrophic loss or for multiple losses out of one event, but still that may not suffice at times. So the option of buying CAT bonds is always available. But still the things are now changing out from the retail side also, or the corporate insurance buyers, I would say. So product innovation and digital technology has been used to widen the scope of this commercial insurance from the traditional insurances to the parametric insurance is what we call. What is the question which you have raised? And usually the parametric insurances which we are referring to are generally also referred to as index-based insurances.
Okay.
So they're not straight away on the like occurrence of an event, but is related to an occurrence of a event with a deviation from a set parameter or a pre-decided parameter. And generally the parametric indices are fixed up around most likely the events like tornadoes, typhoons, as and it's based of a occurrence of a typhoon or occurrence of an earthquake of a particular intensity. So it is a captured data and monitoring process, and then it moves on.
Amit, can I just interrupt you for a minute? When you were talking about the act of God perils in the previous slide, one of our viewers would like to understand, that the standard format of a parametric solution deals with, act of God perils as such. But are we also looking at other perils being covered under the parametric solution?
Yes, actually, there are quite a few things which can be worked out. It's just the beginning of the thing, and the insurers are now understanding, especially with using technology, what could be the alternate solutions for various insurance parameters. See, it could be even for a personal accident or for a parameter of a weather causing any other impacts like on flight delays or cancellation of trips or low bookings in hotels. There are so many things which can be done actually. This is just a precursor to the things. Okay. But right now it is being largely used for act of God peril related scenarios.
Okay, fair enough. Right.
So the key parameters, like when we say the characteristics of a parameter obviously have to be, they are independently verifiable, transparent and consistent. In fact, I picked up one more thing which they say, it's high trust, because many times it is alleged that the insurance companies' contracts are obviously full of legalese, and insurers make their own efforts to try to avoid a liability or attending to a claim. So here, since this is all independently done, because the data will be more from a third party, not from an insurance company's own assessment of a document. So the high trust factor comes in with the customers, which definitely also requires a higher level of literacy or maybe more transparency by the insurance companies to educate the customers on the clarity. Zero touch, since it's not of much of things, if a parameter has been triggered, that triggers of a claim. Now, using technology, that could be automated. If it is not otherwise, still it can be not influenced by anyone. Then the speed, because when you have a trigger by way of a parameter and a deviation from a parameter triggers of a claim as per a pre-decided structure of the payouts, then the speed obviously comes in, because there is no subjectivity element or a manual intervention, which is normally the cause of maximum disputes in insurance companies. The insurable trigger obviously has to be fortuitous still, which is the key for our insurance, but it should also be something which can be modeled. So that's where maybe when your audience, somebody asked, yes, anything which can be modeled, but it has to be fortuitous, can be used as an insurable trigger. And then the second factor which is important in the structuring of the parametric indices is that the payout mechanism is structured, but again, it is not prefixed. So it could be bespoke, which means based on the specific customer's requirements, a parameter based on the risk appetite of the customer, a parameter could be structured and a payout mechanism could be decided. So both the parties are clear. So it's again moving away from the traditional insurance where all the requirements of the needs program still goes by the way the insurer wants it to be. So the way it is worked out, a payout mechanism can be really what needs of the buyer of the insurance. So we have seen parametric insurance already in our country, like in form of what we say the crop insurance. Weather-based index insurance has been used widely in our country. In fact, our company, IFCO Tokyo General Insurance, was amongst the pioneers to have started this and we were the part of the privileged group to initiate that cover in the country. Then we have situations which we see what we call as a typical cat in box solutions which are being done. A policy may be triggered, may be structured to pay a particular percentage of a sum insured or a limit for a predefined limit, let's say a Cat 3 event of a hurricane, Cat 4 or Cat 5, occurring in a particular distance or a region or a zone. So that, so it becomes very clear and independent. It's not an insurance company which is going to measure the intensity. There are central agencies, there are independent parties which are going to be the ones who are going to announce whether that particular intensity happened in a particular region. So, the independence of the thing which can help us trigger and assess a claim faster. So the client has those address and the area based on the longitude, latitude of the geo coordinate, and based on those things, it can be decided and fixed up. So it's not only, and particularly when we say in insurance, our traditional insurance is it should be only for the risk which I'm occupying. It is only for where I have an insured interest, I would say, insurable interest. It may generally emanates from the assets which we own. Whereas, whereas in parametric insurance, we could also peg our losses or potential losses based on, let us say, a breakdown of a utility services, which means that, or a supplier's premises getting affected in terms of contingent liabilities.
Okay.
So all those aspects can be addressed, which are generally not addressed or limited in some fashion in the traditional insurance.
So basically what you're telling me is that apart from the act of God perils, these could be some of the other perils that we could be covering under the parametric solutions.
Yes, precisely. As I said, fundamentally, we have to see whether it is fortuitous event, because that is the fundamental issue of insurance, and it could be something which can be modeled in some fashion.
Fair enough.
So that can be done. You have a structure available, and we can work out a solution. So now just to summarize what we had seen, traditional insurance versus the index-based insurance. Typically, the concept is you pay a premium for asset insurance on which you have an insurable interest in first instance. That is a direct insurable interest. Payment is made when the actual loss happens. There is a process of investigation, assessment, which could be prolonged, unfortunately, in a cat event, and it could take time. Hats off to Atul when he says in their team, they could pay the claims at Muscat so fast because of the flooding or inundation which happened. Generally, the insurance companies, in event of these losses, take a long time to make assessments, and there are so many things to be established. Because you have to go for an actual inspection, which could have a challenge in the claims, the people not having supporting documents, all those things make it more complex in a traditional insurance. Whereas in parametric insurance, since it's a probability is predefined, the structure of payout is predefined, it's just a matter of establishing whether the thing happened, it happened to that intensity, and you pay up.
Okay.
But the flip side is, yes, what we say in insurance, we are supposed to be giving a strict indemnity, but in parametric insurance, we could have a situation you may end up paying more than indemnity, which should be there. But that's how the structure is done, which means some people at times to say that it could be speculative, it could be gambling, and that's how the treatment in very many jurisdictions vary on this. Insurance, when they say if it is established related to a natural parameter, most of the companies and domains would agree to be it to be an insurance product per se. See, now again, we don't say that insurance, the traditional insurance can be replaced, but we say that traditional insurance does not address all aspects of risk transfer or a full risk transfer to an insurance company. While 100% risk transfer at times may not be possible, and the traditional insurance has its own deductibles, exclusions, because capacity limitations and financial issues, but a parametric insurance comes to complement that, and a person can still buy a traditional insurance plus a parametric insurance to cover for the loss due to the factor of the deductibles or certain perils which are not covered because of the catastrophic effect those perils could cause on those insurance companies. Many of our exclusions, if you see, There are exclusions because of the huge catastrophic impact they can have on the balance sheet of various insurance companies. So generally, either they are added perils or they are excluded perils. But many of such perils can now be structurally covered under a parametric insurance. Typically, when you say contingent business liability is a classic case, contingent business liability is generally not covered or covered with a very small limit, which I can just elaborate on that. Suppose what happened in this, there is a factory which is an ancillary unit for an automobile manufacturer. The ancillary unit gets affected by a natural catastrophe or any loss. Because of the disruption of the supplies from the ancillary unit, sorry, the business, your own business of the OE manufacturer for automobiles can get impacted. That is a contingent business interruption. So a parametric solution can also be worked out on that. Suppose the power supply gets impacted from the utility, your business can get interrupted. That is a contingent business, that is a contingent business interruption cover, which can again be structured in parametric insurance solutions. As we said, the advantages are very distinct. None of the risk taker or the insured, they cannot influence. You can't possibly cause a typhoon or a tornado. While there are jokes in insurance fraternity when people say that how do you cause an earthquake? But fine, the fact remains that you can't cause these NatCat perils directly as individuals. And the speed of the recovery payout process becomes fast. Bespoke, as I said, it's not the traditional insurance that I say, this is my fire policy, this is what I can offer to you. Sorry, rest of the things, some add-ons are there, but this is it. So we can structure a bespoke product under a parametric solution to provide and cover the insured to a larger extent, which means eliminating the coverage gaps which arise in various industries. Typically, we were, if you remember, around a few decades back, maybe around 25 years back, we never had a weather index solution. We are talking about only crop yield, which has its own challenges. Now you are saying, sitting in your offices, you can still structure and administer a weather index based product based on the remote sensing data, based on the IMA data, IMD data. So these things can be worked out now. Cleanup costs, typically, like an example, cleanup costs are always limited. But if you have a parameter which can really say in event of this kind of a happening, this is the extent of a spread, we can give you cleanup cost up to this level. Yeah, that's possible now. It can be insured. Transparency, as we said, because it's all official reporting agencies or independent third parties who set up weather stations or who have other measuring remote sensing data from international agencies, which could be easily verified by independent parties without any prejudice. It can help the build up the trust of the customers as well as make the claim settlement process much easier. Yes, we have been talking about the rosy part of the parametric insurance, but it has its own flip sides also. Like we said, there is a deductible in a regular insurance. We have a differential here. There is a basis risk. There is 100% of the risk no insurer would like to take up. It's like we say from the ground up risk in parametric, people will try to avoid because it's all an evolving field and people would like to eliminate certain biases on this. Sophisticated structures are being built for that by saying payment, payout, staggered tables could be there based on the appetite of the insurer, based on the capital available for running the risk. So these things can be structured, but the full basis risk factor cannot be still addressed.
Amit, can I just interrupt you for a minute here, because what is happening is that we are also taking up the questions that are coming this way. If you remember, we have been talking about the NatCat events and the
yes.
AOG perils, so as to say, the Sendai framework for the disaster risk reduction, which is a part of the 2015 Paris Agreement, ending up there, that also talks about disaster risk reduction. Now, one of our viewers, Mr. Mukherjee, has raised this question that while we have been talking about parametric solutions, the AOG perils, the various methods and ways of going about it, do you think that this particular proposition in any way can also help in disaster risk reduction?
Is again the level of preparedness. It's a very important question. It's a level of preparedness and the response times. So when we say disaster relief, if you are able to make out faster payouts, the people can come back to normalcy fast, and all the institutions and corporate entities impacted could have a faster response to support relief mechanism. So definitely it works in close coordination with the relief setups. So in terms of financial relief coming back to the parties, whether it's an agency or a utility or an individual family, so they can come back to normalcy in true sense in a speedier way.
Fair enough. Because
does that answer your question?
Yeah, I know. No, not in totality. Rest assured, because I'll be grading my third panelist on that issue. But can I request you to just wind up, please, because we're running short of time.
Now, just to address maybe what one of the audience had asked, see, we have situations called multi-year insurance programs for a typical like hydrological drought affecting a water scarcity for a utility company, which can impact their balance sheets, cause business interruption. Examples are Sao Paulo in Colombia. They have taken these programs which helps the utility company itself. China Airlines took a flight delay insurance. In fact, it was one of the fastest selling products through, again, our technology platforms. When you say they sold 1 million covers in one day. And again, it's typically because of, say, haze or any particular weather parameter which can trigger off flight delays, which is easily measurable independently from a party agency, and you can just pay off and trigger off the claims, refunds to the parties or additional paybacks to the passengers. Similarly, hotels seeing cancellation on drop-in bookings due to extreme weather events. They can be structured. I remember way back when we were in IFCO Tokyo itself, there was a salt company when we started the weather index. A salt manufacturing company came back to us that there is a heavy precipitation. If there is that situation, it affects my business. Can you structure a product? And yes, we could do some solution with them. We're talking to Swiss Re. In coordination with Swiss Re, we could build up the first of the pilot projects for them. Jumpstart Insurance in California talks about relates to the earthquakes. It says once an earthquake of a particular intensity is being observed, there is a trigger up to $10,000 worth of a cover automatically. So you have to just show that yes, there was some losses, send some basic pictures, and they just trigger off. So it's not like whether a loss was $2,000 or $20,000, we still pay you the prefixed amount. So it comes as an interim and immediate relief actually for the people. A storm piece in Florida for hurricanes, again, that's again related to the intensity of the hurricane in a particular neighborhood. You can get compensation straight away, electronically passed on to the users. Wind velocity triggers. I remember Vestas RRB had asked to us when the wind velocities and there is a change because this is a natural change. Wind velocities may change leading to a reduction in the production of power. Can that be done? Yes, till the time it can be modeled, till the things can be predicted, we can work out a solution. That's it from my side, and questions are welcome. Pratik, over to you.
Wonderful. Thank you very much, Amit, because the normal impression that I get from the discussions that we've had so far with Atul and you is that whether you like it or not, the support has to come from the reinsurer. Can we just remove this presentation, please, Amit? Yeah. So therefore, I'll just leave you at this stage, and I will direct my questions to my third panelist, Pankaj. Pankaj, you are a reinsurer. Now, the impression that I've gathered from these two people is that, okay, Baba, we'll do whatever we have to do, but the support has to come from the reinsurer. So is it true that it is the reinsurer who actually provides these covers for the climate change, or so as to say the climate change risk solutions?
Sure. Thanks, Prateek. So, interesting question. But before that, I am intrigued to draw a parallel analogy. In fact, 4 5 years back, I remember having a similar panel discussion, and the topic was the insurability of coal-based power plants, specifically in Indian context. And very interesting. There were three different schools of thought from the people who were representing the industry then. I'm talking about 5 years before. One view was that this whole talk on insurability of coal-based power plant is unreal. The reason because we have economies like India, Indonesia, China, who are, let's say, heavily dependent on coal or fossil fuels. So we cannot really think of a situation that, in future, there may not be a cover for a coal-based power plant. So this was one school of thought, one view from the industry. Then there was a second view that, well, it's a threat, it's a real threat. But in all likelihood, it is going to be concentrated to the West. And so long as India is concerned, we have some giant public sector insurers, the national reinsurers, and then they will always be there for our rescue. What they probably could not or did not realize is that our industry does not work in isolation. So anything happening, the likes of WTC impacts, the insurance rates for terrorism across the globe. And today, if you see, with respect to climate change, we are in the same situation. So if I'll have to give you some sense from the stakeholders we speak to in India, some of them say that it's not a real threat because India is a diverse country. We have seen number of catastrophes in the past. And so we are quite resilient, and therefore all this, the temporary shift in the rising of, so to say, IIB rates or insurers putting up certain restrictions on AOG, all this is something we as an industry have seen it several times in the past, and that is very temporary and will be back to where we were. So this analogy is very interesting because first, I'll spend a few minutes and without obviously repeating what my co-panelists have already said. So why insurers are, or I'll change the word insurer and reinsurers interchangeably during my discussion. So why insurers or reinsurers are at the forefront of climate change. So what we do as a business, we identify risk and then we model it. And so long, so far, insurers, or you can say reinsurers, we have been taking help of certain CAT models, using which we were doing the risk assessment and pricing. What has gone wrong in last couple of years is that the dependence on these CAT models, because the way these CAT models work, they take historical data of, let's say, 40-50 years, and basis that we create, some pricing models. And you would have heard the terms like the return period once in 10 years, 20 years, 50 years. And all these terms are now going for a toss because the models which were throwing these numbers to us so far are being challenged by the climate change. So you get to see events every third year, taking into account the historical data of last 50 years would tell you that it's a once in 50-year event. And therefore, for insurers, so there are two problems. So with respect to climate change, there is something called acute risk. So acute risk is something when we face any flood or any cyclone. And then there is something called chronic risk. So chronic risk is all the more important for us, especially for reinsurers, because our, the models on which we were relying so far, there is a big question mark on that, because this chronic risk, with time, the climate change is going to make a huge impact on the result of these models which we have been using so far. So essentially, because of these two primary risks, I would say insurers are at the forefront of having a fight with climate change, whether by choice or by force. But yes, they are. Now, slightly coming back to your question. Now, insurers and reinsurers across the globe, in last couple of years, they have adopted something called principles of sustainable insurance. So concept is called PSI. It was given by United Nations, and it's more like a mandate to all the global insurers and reinsurers that you will follow four principles with respect to climate change. Number one is that you will include something called ESG in your decision making. I'll spend a couple of minutes on what they mean when they say that you will imbibe this ESG in your decision making. So, for an insurer or reinsurer, there are two main verticals. I would say, one the underwriting, and the other one is investment. So the expectation from us, both from insurers and reinsurers, is one to do certain activities on the underwriting side. And when I say on the underwriting side, there are two ways of doing it. Either I tweak with my customer base, and I decide to switch to the customers who are producing less carbon. So that is one way, and for that there is no brainer required. In fact, as you would see, most of the global reinsurers and insurers, they have decided not to provide any capacity for fossil fuels and similar risks. So that's one way of doing it. Now, the other way of doing it is that you come up with certain products, or you come up with certain services which help your client in transition. So, like, for example, if a client is poised to do a transition from, let's say, carbon intensive economy to a less carbon intensive economy, there will be certain risks like transition risks. And as Mr. Amit was already highlighting that, let's say for renewables, so there is a whole lot of investment happening on the renewable sector. More and more you would see the wind and solar plants are coming up in Asia, including in India. But there is something very, very interesting. Because of climate change, what we have done as an organization, we have some study, and what we have seen that in certain pockets in India, the solar irradiation or the wind velocity or the wind availability is going down every year. So while at one hand we are saying that we are making a transition to a low carbon economy, but then that low carbon economy itself is impacted by the climate change. And therefore, this, the second piece, which I said that insurers and reinsurers are basically responsible to come up with, is to provide insurance products for those transition risks. And that's where these covers like, the loss of revenue generation if there is not enough wind as projected in a particular duration. Same is the case of loss of solar irradiation. For a hydropower plant, it could be, the less rainfall in the catchment area in a particular duration. So with these covers, the reinsurers and insurers are expected to, provide help and support to those who are taking a conscious decision to make a transition from a high carbon economy to a low carbon economy. So this piece is on the underwriting side. On the investment side, while in India we know that our investments for the insurers and reinsurers are largely regulated, and there is a very little room where you can play with these investments. However, the expectation is that in the time to come, there will be regulations which will drive us to imbibe, climate in our investment strategy also. In fact, just to give you an example, some of the reinsurers in the West, what they are thinking that they will give their large institutional clients basically a power or ability to decide where their premiums are going to be invested. So if I'm paying a premium worth $20 million, I should have some say in telling the insurance company that I want my premiums to be invested in low carbon economies. So we are talking about those kind of transitions, and I'm certain that if not today, maybe in the years to come, you will see these kind of regulations in our country also. So primarily, these are the two aspects where we all are expected to imbibe climate in our decision making, both on the underwriting and on the investment side. And therefore, there are organizations like the organization I represent, AXA Climate. Using these sustainable principles, we have come up with certain services. Maybe during the discussion, if I have time, I'll touch upon on certain the help or support which we are providing to the industry. So this is my long response to your short question.
Right, that was That was absolutely necessary, I should say, because the kind of arrangements or the kind of reaction that the insurance companies and some of the reinsurers have towards this climate change, it brings out more questions than it provides answers to. Now, for instance, you just talked about that support. We are aware that AXA Climate has done a lot of educational activities towards improving the entire atmosphere about climate change. Now, compared to this, I know of the other insurers and reinsurers. There are certain reinsurers located outside, who are putting in their bit to do this. But since you are here, can you just throw some light on the kind of activities that you've been doing about spreading awareness, which is again a part of the SDGs that we talked about?
Sure. So maybe for that, if you allow, I can put up one slide.
Yeah, please, absolutely.
Which I can show. Just give me a minute.
Sure.
Let me know when you can see the screen.
Yeah, we can see the screen.
Okay, so to answer your question, and in fact both your questions, how we are creating the climate ambition as an organization, AXA Climate. So we have three verticals within the organization, and the first one, which is very, very important, is around training. So today we all talk about climate change, but if you were to ask that how will you identify, which is the first stage of the risk management process, how will you identify climate risk? So far, what we have been doing, and especially my risk consulting, risk engineering friends, we all have been using certain maps, while identifying whether a particular location or lat long is exposed to a particular NatCat peril. And those maps are again, outcome of those models which have been taking those 40, 50 years of historical data. So what is important at this moment is to change, or I would say revamp those traditional definitions of identifying risks. Because climate risk is not something which you can identify from last 40 years data. What you need to see what is going to happen 10 years down the line or probably 30 years down the line. So training is one bit, one segment in our organization where we help corporates, all the industries, governments, insurers, reinsurers, even some business schools, to help them understand what climate risk is and what it means for different stakeholders. Like, for example, if in my company there is a HR professional who says that, okay, I understand there's a lot of talk being done on climate change, but how as a HR professional I'm impacted by climate change. So we have done, we have designed certain modules for each of those specialities for them to appreciate what climate change is, how it is impacting us, and what it means for all those stakeholders. So that is what we do under training, and this is driven by one of the principles of creating awareness and making people aware about what climate change is. The second box which you see is for industry adaptation. Under industry adaptation, it's a pure consulting service which we offer to our clients, and clients are insurers, the corporates. So all those who have a large portfolio, and they are unsure how that portfolio is going to behave in next 10 years, 20 years, or 30 years, given climate change. And you wouldn't believe there is a concept called stranded risk, where there are certain studies which say that almost 20 to 30% of what is being insured today will be stranded 10 years down the line. So by stranded, what we mean is that they will not be producing any income. So imagine those 30% assets going out from the supply chain will be a big hit, not only to the corporates but to the insurers also. So what we do here under industry adaptation, we help our clients, including insurers, to analyze their portfolio, to guide them how their portfolio will look like 10 years, 20 years down the line if they continue insuring those assets or those supply chains. So this is precisely in short about industry adaptation. And the third box is parametric insurance, which Mr. Amit has already talked about. So I'll skip this one, but as you would appreciate that under these three boxes, we are not only trying to imbibe ESG in our decision making, but we are also helping clients to make a transition. Any questions? I'll be more than happy to answer.
No, this is absolutely fantastic, because you provided us an insight into what exactly is being proactive towards climate change and what solutions AXA has been offering to us. Thank you very much, Pankaj. I'll just take a minute because I'll go back to Atul when I would like to ask a question to him, because Atul, now that we've had a brief about the various perspectives, you've interacted with a lot of reinsurers, and I'm sure you would have interacted with insurers probably at some time or the other regarding a situation that could have cropped up because of climate change. Can you just let us know of any such incident or any such activity that happened with you?
Well, to be very honest, I have been mostly involved on the direct marketing side, so I haven't had this thing. But yes, we have been doing crop insurance in Universal Sompo for quite some time now, and I guess I must say that the team has been doing a fantastic job on that particular front. So, as Amit has mentioned that, we have been offering weather-based products, like to the customers, like who have taken loan facilities from the promoter banks, which Universal Sompo is having. And the experience for us has been extremely good. As Pankaj has mentioned that, ultimately it's a financial model. So you have to be very, clear as to what your objectives are. So when we did the crop insurance for the first time, the entire management, I must say, has done a fantastically good job in terms of, because as Amit has mentioned that we rely on the data which is going to be furnished to us by the external agencies. So usually, in a typical scenario where the district DMs will notify the dates on which the crop survey will be done. Universal Sompo, in conjunction with the reinsurer, just to give them a good, impression about the way we are handling the claims cases, we have deployed our own resources when the crop cutting activities are going on. So whenever any crop cutting activity was notified, we have ensured that one of our team member was also present over there, so that to eliminate the chance of any goof up, because of false reporting from those locations.
But Atul, I'll have to interrupt you at this point. Are you telling me that the data was one of the challenges that your organization faced when you thought in terms of providing a solution to this problem of agriculture insurance?
No, not the data. In fact, the moral hazard involved, I guess, was basically mitigated by making sure that our team was present and the actual values were taken when the crop cutting activities took place. And to a large extent, what we did was we made sure that, the data flows which was flowing to us was realistic. It was basically accurate, based on which, we could have this thing. So a lot of times, most of the insurance companies have to rely on the external agencies to basically get the data based on which the claim decisions are made. So in our case, what we have done is, we have basically tried to ensure that whenever any crop cutting activity is notified, one of our representatives was there so that, the flow of data from those centers were flowing accurately to us, which helped us in basically, controlling the claim cost and made it a win-win situation.
Great. Now, I'll just take that point from there to Amit. Amit, you worked in the Indian insurance companies and you're working abroad. We talked about the technological advancements as such, but tell me something. From your experience, what kind of challenges do the Indian insurers face vis-a-vis providing solutions for climate risks?
As we said, first, the challenges which maybe very first instance when we said, and what even Pankaj mentioned, when we started off with IFCO Tokyo for the structuring of the weather index based solution with the Tokyo Marine Group, the challenge was the data. When we got the data, because as we said, that time we were talking about 100-year data, which fortunately IMD had almost, I think, 70 or 80 years data that time. We had to still fill in the gaps in the training for that. So you need an expertise and a support of a international or like global reinsurer that time. Then you need to have the capability, financial ability to spend money and efforts and time on these kind of activities. That's one. Second stage was when we came to the issue about the parameters, the IMD data, and getting in touch with the local authorities to get the data for a particular region, which will be a trigger. It was contested by many people in the local areas. Typically, we had major issues in Gujarat, where the villagers or people from a particular pocket will say, no, this does not happen. This data center is far off from our place. Then as IFCO Tokyo, what we did was we took initiative that we tied up with the partner, and it was a partnership with a private entity to set up weather stations. So we started putting up our weather stations jointly with a private partner, and which finally helped us out. So those challenges come. First is the effort, because these policies on the traditional side will take a lot of effort, time and money and manpower. On the parametric side, it could be relatively easier, but then again, you require the contacts and connect with the right reinsurers and technology partners to get the first onboarding, delivery, and efficient claim management.
Got your point, absolutely. Because in fact, I wanted to continue with that, but I have a very specific question for Pankaj. Pankaj, one of my students, Saransh Rathore, he wants to understand this point when you talked about including clauses like working with low carbon footprint, footprint economics and businesses, What he wants to understand is, do you think it's, is the time right for Indian insurers also to start having such clauses?
Sure. So maybe I'll put a question back to Saransh, that when does he think would be the right time for India, let's say, to start talking about coal? All major reinsurers have stopped providing capacity. There are a few. In next couple of years, they'll also stop providing capacity. And so far, at least to my knowledge, there is no working group, there is no formal forum in India being made to address this problem of what is going to happen 3 years down the line. Because either we are thinking that, okay, we'll discuss only when it happens, because it may or may not happen, or we are thinking that we have some, giant insurers and national reinsurer, and it is their problem to solve it. So my answer to this is, if we don't do it now, 2-3 years down the line, we'll be in a huge difficulty.
I think you got your solution, Saransh, but my next question is also again from one of my students, and Atul, I would like you to respond on this, because he says, and I quote him, India is trying to do international solar alliances with all the sunshine countries. Can this type of alliance provide a new market for Indian insurance companies? How do you react to that?
Well, the answer is yes. I guess I must compliment the current government, which is trying to, reduce the carbon emissions, and by venturing extensively into solar and wind power. A lot of companies which have come, the government is taking conscious this thing. A lot of projects which are coming up in India, with an objective of reducing the carbon footprint and reducing the carbon emissions. So I guess with these kind of new technologies which are coming to the Indian market, you will see a lot of product innovation which will happen. A lot of solar plants are being set up in Rajasthan, in Gujarat, down south, and we are seeing a lot of windmill projects which are coming up down south. So all these things will start, a new era of insurance in the Indian market. I typically remember that when we started writing the windmills, like majority of the time, the claims which we used to have were, for the copper wires which used to get stolen from the base station. So Suzlon came up and, they came up with the innovative idea of basically putting the base station in the tower itself. So, and then they started guarding, because these are basically unmanned locations, like where the majority of the time you see some petty thefts which are happening from the gearbox of the windmill which has been established. Similarly, in terms of this thing now, when we talk about solar, you understand that, Gujarat Borosil was one of the leading companies which is basically trying to come up with glasses which are going to be put on solar panels, which will increase the efficiency of the the solar panels per se, and by minimizing the loss of heat which will be there on the panels. So there are some product innovations which are taking place, and corresponding to that, like with the kind of covers which are going to be required for those panels and for the windmills which are going to be put in place. We have a windmill insurance policy which has been introduced, which was predominantly an unknown subject for most of the Indian insurers, maybe a few decades back. And now, because of the companies like Uja Global and few others, which are basically trying to establish their base in the Indian market, on the solar side, I guess, we are seeing a lot of changes or the demand which are coming up. Predominantly, I agree with Pankaj that these are specialized insurance covers, so we actually do rely a lot on the insurance support to this thing, because these are some of the technologies which have been imported from outside. So wherever such technical expertise is available in terms of the financial models which can be implemented in the country, in terms of the coverages which it can be offered and the pricing which can be charged for insuring those assets, is flowing to us from the reinsurers. And most of the Indian insurance companies are offering a very limited capacity for such kind of risks. So yes, but yeah, new product covers, new product innovations are taking place. We are seeing new kind of covers which are coming up, and I guess the market will see a lot of changes in the days to come, because we ourselves are changing and responding to the needs of the hour.
Yeah, absolutely. In fact, I'm sure Prince would have got the response to this question that he asked. In fact, this concept of a hydrogen fuel, which one of my students has asked, Amit, I'll direct that question to you. He says he wants to understand that hydrogen fuel is a future fuel. So basically, what he wants to understand is what kind of a data are we now speaking about, because this particular thing is absolutely new in the market. You're muted, boss.
Yeah. Sorry, I lost the connection in between. Maybe if you permit, maybe I would rather request Pankaj to throw more light on this aspect, if that's okay.
Sure.
Absolutely. Yeah.
Absolutely. So, see, in terms of hydrogen, it will be quite premature to talk about what risks we are going to see in the time to come, because currently how it is perceived by the insurers and reinsurers is similar to any oil and gas or a petrochemical unit in terms of risk profiling. But we are unaware of several risks which we may get to see when when a lot of transition happens to hydrogen, both on the property and on the liability side. So I believe we'll have to wait and watch and see what kind of risks are going to evolve in future.
Oh, great. And one of the questions that has come up is, Pankaj, it says that how can we leave the coal-fired power plants in a lurch? Now, I'm surprised that a question like this could be raised, keeping in mind the fact that we should have reacted yesterday to the climate change situation today. We are not leaving things in a lurch, sir. What we are trying to do is give you better options to switch over. And if you do not change with the times, what we call the dinosaur industries will be extinct. So that's on an absolutely different note altogether. But Amit, I'm not going to spare you, because there is another yet question coming for you. And this is again from one of our students, Satyam. He wants to understand that, as you also said, and Pankaj also talked about, there are coastal cities that are expected to be submerged in water in the near future. how do you think that the insurance companies and the reinsurance companies will deal with such a peril and an event that happens? What should be their reaction? What should be their response?
Thank you for the question. That's an interesting one. And we keep on always talking about it because all of you, all of us effectively, when you want to buy a property in Bombay and you
I think, okay. Yeah, I think we have lost him. Maybe he'll have to join again. Would you mind responding to that, Pankaj?
Yes, sure. So, in fact, if you see from an insurer's perspective, and this is very, very interesting. Some of the insurers we talk to, they say that we issue a 12 months policy. So we are not really concerned about, the chronic impact of these climate risks. However, at the same time, they say that we have a retention philosophy of retaining at least 80% of what we are doing in this particular year on year. Which means you are saying that even though my contract is for 12 months, but the mandate from the management is to retain what I have. And therefore, what is important from their perspective is that if they have certain portfolio of risks, which is, let's say, on the East Coast, and given the increased frequency and severity of the cyclone, what is important for them to see that in a 10 years horizon, how this change in the increase in frequency and severity for my risks which are located in that particular region is going to evolve, and that should decide my marketing and underwriting strategy. So to answer his question, yes, I mean from there the principles of risk management should begin.
Makes sense, absolutely. In fact, we are just nearing our completion time. I have another question from one from my students, Vivek. And Atul, you will have to respond to this. Okay. The question is he wants to understand as to how the insurers themselves were exposed to these physical this transitions and liability risks from climate change. Do they simply take the shelter of the reinsurers, or do they plan something on their own also? I mean, if you remember, when we were talking about the risk management process, I also inquired about the business continuity plans as such. So you talked about one of the financial aspects, the other deals, I guess, probably with this, how do you respond to that?
Well, I will say it's a question of demand and supply, depending upon the kind of needs which are arising because of the complexity of the businesses which are being done. We get into a situation where the support and expertise of an insurance company or a reinsurer is basically sought for any liability risk which has evolved suddenly. So obviously, like if any risk is there and if a viable solution can be offered to it, what would be the terms, what will be the pricing, all that has to be factored into, and then it has to be brought in the shape of a policy. So the new risks which are emerging in the Indian market, I am sure that a lot of demand for some special innovative liability covers will come into the picture. Let me share one experience with you that Electricity de France, which is one of my clients, which were planning to establish a nuclear power plant in India, because if you remember, Mr. Atal Bihari Vajpayee basically gave a green signal for all the power plants, which are going to have 2,500 and above megawatt capacity, they will be given a priority clearance. So they wanted to establish a nuclear power plant, but because of environmental issue, it couldn't be done. So they were actually thinking of pouring into a coal-based plant in Bhadravati, and they approached the Coal India Limited to sign a continuous fuel supply agreement with them. And Coal India basically, despite giving coal to NTPC on, they were not getting the upfront payments. That it was given on loan, and then the EDF wanted to basically give them the payment upfront, and they just wanted to ensure that the coal which is going to be available, which is going to be made available to them, should be made without any delay. And Coal India chairman basically refused to sign, so the deal didn't go through. So these are some of the new kind of technicalities which are emerging, because in US, if you talk about companies like EDF, where the 98% of the electricity is being generated through nuclear means, there, if as a consumer, if you actually lose power for about a hour also, the electricity utility company pays you for the for the compensation for the time for which you haven't had electricity. These kind of things are unknown in the Indian market. Maybe down the line, when we come up with certain specific solutions, like which can guarantee continuous electricity in our homes and few other things, the demand for these covers will not be there. But then, like the entire project fails because there was nobody who was willing to take the liability for or to arrange the continuous fuel supply for companies like EDF. So these are some of the new risks, new dimensions which are going to emerge, which are basically going to set up a precedent for experts like maybe Pankaj and this thing to basically create a financial model to tide over such contingencies, like which are going to emerge in the Indian market.
Okay, point noted. Point noted. Can I have Professor Manoj Pandey for a minute, sir? Sir, are you there? Professor Pandey, sir? Sir, would you like to say something to the panel, or do you have any queries that you'd like to address to any one of our three experts, sir? Sir, you are muted.
No question from my side. Many questions were there, and the Power Pack panel was there at your disposal. It was really a great listening from my side. I am person from life insurance. Everything was a knowledge to me. So thank you from my side. That is what I can say right now.
And to the panel, I have a few questions, but I'll just take one last question, and that will be addressed to Pankaj. Pankaj, what are your thoughts on the effects of radiations these days? And do you think any insurance company has a role to play there?
First of all, I'm not qualified to answer this, so maybe I'll pass this to my fellow panelists if they can throw some light, but be able to answer.
You know what, Pankaj? I did not want to take this question because I myself was not very sure as to what exactly was the answer which Fiza was expecting from us when she asked this question. And so I thought maybe I'll pass it on to you.
But I think that came because of Pankaj talked about the changes that helping companies to transition phase. There he mentioned that solar companies are finding it difficult because of climate change, the radiations are getting affected. I think that.
Okay, so if that question is with respect to solar radiations, I took radiation in some other context.
I think that came from your statement.
Absolutely.
Okay. So I'll take only a couple of minutes. So what happens for a solar power plants that if in certain months, if there is erratic rainfall, there is a cloud cover, then there is not enough sun for the IPPs to produce power. And therefore, what they estimate, let's say that they are going to produce X megawatt hour in next 12 months is not the case because of climate change. The number of days for erratic rainfall as well as for cloud covers are changing. And therefore, all those assumptions are now going for a toss. So there is a huge pressure from lenders and from investors to those IPPs to go and secure insurance cover for a situation where not enough electricity is produced if there is a loss of solar irradiation. And there is a cover available. And to answer to the specific question of the student, we have done this cover in India for a couple of IPPs.
Absolutely. I hope, Fiza, this was what you are looking at and you've got your answer. In fact, Atul and Amit, you have good wishes coming from Mr. Suresh Kadan, and Amit, good to see you back. Rachel, I'm almost through with my three panelists, and honestly speaking, couldn't have asked for better interactions and better responses from the panel. I'm grateful to all three of you that you could spare out time and be with us, be with our students. Rachel, all yours.
Yes, sir, definitely. So we all know climate change is indeed a serious issue and how the insurance industry underwent changes to respond to the need and help its customers by adapting to technological changes as well. For making predictions from previous trends to estimate the worst case scenario is indeed commendable. On behalf of the entire Windmill family, I extend a heartfelt gratitude to Atul sir, Amit sir, Pankaj sir, and Prateek sir for enlightening us with your thoughts on the proactive measures that the industry is using to tackle the situation concerning climate change. This session wouldn't have been a success without our patient listeners. You were amazing, and thank you so much for joining us today. I would also like to take this opportunity to thank the team behind arranging the session, the IT and support staff for the smooth running of this online event. Last but not the least, I thank Birla Institute of Management Technology, our management, our director, sir, and all our faculties for organizing this event and inviting such eminent industry experts for this discussion. Once again, thank you to each and everyone for being a part of this discussion. Thank you so much.
Thank you.
Thank you very much. Sir.
Thank you.
Thank you.
Thank you.
Thank you, Amitjit, Dugal sir, and Pankaj.
Thank you, sir.
It's always a pleasure. Thank you very much.